Welcome back, family. Okay, so as you can see, we still don't have a name, so the challenge is still going on. $100, come up with a name, especially if it's not trademark. Bing, bing.
Bing.
Today, we're talking about a topic that it excites me. We're talking about, is it better to use a mortgage to buy property or all cash? So all cash is when you're sitting on $300,000 and you can buy the property without going to a bank and using their funding. So I'm going to tell you the benefits and the downfalls. That makes sense, right? Mm-hmm. All right. So example, when you get a mortgage, you use a portion of the money that you have saved. So it could be anywhere from 3.5% to 20% to 50% to how much ever you want. Honestly, you don't have a limit of how much money you're putting down, but it's
a minimum, but there's no maximum.
Oh, I like that. Bing. Okay. Well, the maximum shouldn't be 100% because then
you don't need a mortgage.
You don't need a mortgage. But you're using that as your down payment, and the bank is financing the rest based off how much your income says that you can afford to pay them back monthly, and they charge you a certain percentage rate, and that's in total, that's pretty much what a mortgage is. Now, of course, there's more details that go into it. That's a simplified version. That's what a mortgage is. Now, when you're buying something all cash, it means that you're sitting on money and you have the money to put down to buy this property all cash. Now, the biggest difference is when you use all cash, that's your own money. You're not getting any finance from a bank. You don't need to go to someone like me, like a lender, and say, hey, I need money.
Run your credit.
Nothing like that. It's pretty much bank statements, and you write a check, which your attorney checks to make sure that the contract is good, and then you just do it that way. Or it's a
duffel bag transaction, you know?
Sometimes it happens. But why would you use either one? All right, so now all cash is usually used when you're doing what's called flipping homes. That means you're buying a house and remodeling it and reselling it. Now, the reason why they do all cash is because in those situations, it's usually people who are in foreclosure, people who need to sell immediately and fast. So due to that reason, a lot of them don't want to wait 30 to 90 days for someone to get a mortgage to buy the property. And then it goes into other details when getting a mortgage, how soon you can get out of it. And most of these houses in these conditions aren't mortgage approved. And a lot of these times, the mortgage isn't allowed to. It's hard to get a mortgage on a property that's beat up. There's maybe skeletons in the closet. No, not real skeletons, but that's how bad some of these houses are. I actually have videos. Maybe Andre could put up one of the houses or two of the houses that we flipped.
We found poop, but no skeletons.
Yeah, we found poop. We found used condoms. There's been holes that you can look up and see the ceiling, but not actually see the ceiling. You see the bathroom tub.
Have gone through the floors.
So you deal with things like that. I don't know why, but right now all the sounds are just hitting at once.
The device is like,
we're working. So a lot of times it's harder to get a mortgage on those properties. Now, some people say, hey, Malcolm, what about a 2 or 3K loan? I remember you telling me we could get a 2 or 3K loan. Yes, you can get a 2 or 3K loan on these properties. But the issue is, how badly does the seller want to sell? Are they willing to wait 30 to 90 days for you to get this mortgage? And in most times they're not. They want the property to be gone. They're like, I'm done with it. The bank said they're foreclosing on me. If I don't close this, I need to leave. Just give me my money. I don't want nothing to do with that. I want to be out. So a lot of times the motivation is high, and the reason that we're able to get these low prices and these good deals is because we have the money sitting in an account. Like, hey, we'll buy it all cash. You don't have to worry about a mortgage. We have the money now, and money talks. So when you're able to do that, you're able to get houses really cheap, but they need a lot of work. So not only do you have to buy the house, you still have to have money to repair the house. So you have to be able to fix it up. That's why it's a loan that you can't go into. You can't do all cash deals and stuff like that unless you have a substantial amount of money set aside. Or you're flipping properties, you're flipping in places that houses are only $20,000, $30,000, where it's not much.
I think you don't have to do it like that. It doesn't have to be a low house in the sense of $20,000, $30,000. You can do a $500,000 house, but it all depends on what your budget is and what your profit margin is going to be.
But I'm saying, as far as the cash wise, I'm like, if you're buying all cash, then they have to have the $500,000.
Yeah, that's what I'm saying. It depends on what your budget is and your profit margin. Because if you have $1 million sitting and you decide, oh, I'm going to go in on this $500,000 project, you still have a $500,000 balance. So why not?
I think we're saying the same thing. You just.
I think I'm just making it more clear for them.
I think Michelle just wanted to say make a point. So and also you have to be careful. That's $500,000. So whenever you're using your own cash, there's no safety net. You have to understand that you are taking a risk. Everything in life, especially when it comes to investment, it's all a risk. Nothing is guaranteed. Now we do things to minimize the risk that you're taking and trying to lower it. But at the end of the day, it is a risk, so you have to be careful. Now, when you're using a mortgage, you're making it's a lot safer in a sense because the bank is making sure that the property appraises for it. They're going to the bank has its own checks to make sure that you're approved for the amount. The bank has enough that the house has enough equity that in case it needs to sell, it's going to cover at least the mortgage or most of the mortgage. So the bank, in another word, is like, it's another protector. They're like, hey, you're buying this house, we're funding it for you. We want to make sure you're good. We're going to make sure you're protected, and we're going to do what we can to make sure to help you, right?
Yes, correct.
Now, the biggest difference is one is used more for flipping, one is used for residential. Now, there have been times where I've seen people say, hey, I'm buying a house to live in, and I just want to make sure I buy it all cash. And they do that just because they don't want a mortgage. Now, personally, I don't always suggest this because, in my opinion, cash is king. So I look at it like this. If your bank is willing to loan you $300,000 at 3.5%, right? That's the interest rate or the APR. And right now, the stock market on average gives you 8%. So that cash that you're going to put down on the house and paid all cash, that $100,000,
you could actually take that and invest it
in the stock market and get 8%, which $100,000 would give you, I think that's $8,000 a year or something like that, right? So you're in my sense, you're losing money if you put it all cash on a house because the interest rate is much lower. It's only 3.5, which is $3,500. So you would technically be gaining $3,500 here, and if you put in the stock market, you could be gaining $8,000. So you're losing a difference of 4.5%. I'm sorry, of $4,500. So that's how I look at it. You got to look at what my money could be doing at this time. And that's what I realized when you get bigger in business and you're more wealthy and you're getting deals thrown at you. There's a lot of good deals and there's a lot of things that a lot of people want to do, but you have finite amount of time. So you start looking at it. What can make me the most money and the quickest return, but also give me the most safety, right?
Yes.
So now you're looking like, hey, yeah, I could buy that all cash, but why would I do that when I'm making more money in this investment? I might as well keep it at this investment and just let the bank finance the rest for me. And that's how you start looking at things. That's how I want you to start looking at deals, especially when you're doing mortgages and you're doing real estate. Focus on what is bringing you the most money and what's bringing you the most deals. And I'm just trying to change what you're thinking. I hope I'm not going off on a tangent. You guys understand what I'm saying. Does that make sense?
I'm following.
I want you guys to start focusing on what brings you the most money and the most time, and focus on that 20%, not the 80% of things. So when it comes to getting a mortgage, yes, if you have the money, you can buy it all cash, but is it really worth it? Because you're losing out on the revenue profits that you could be getting if you put in another investment.
And don't get us wrong, this is just the way we see it and the blueprints that we follow. You don't have to follow the same thing. If you feel like, putting all your money down to something works rather than investing in it, then that's what works for you. But if you like what we're doing and you think it makes sense and you want to follow on the same track that we are, then just listen.
It's just our opinion. It's all opinion. It's not financial advice. I'm not telling you what to do with your money. I'm just saying that this is how we think, and this is how a lot of the wealthy think. They look at it. Like, a lot of people don't know, Mark Zuckerberg, the CEO of Facebook, well, Meta now, he actually has a mortgage on his house. Now, this man is a billionaire, multi-billionaire. Why would he do that? Because the amount of money that the bank was charging him was like nothing. It was lower than inflation. So to him, it made more sense to do that, and he could do other things with his money. So that just goes to show you that this is not thinking that we just created ourselves. This is from the wealthy, and then we're just on that same vibration now and seeing where our money can go and focusing on the 20% and not the 80%. Because the 20% brings you the most money. So when you're doing real estate, when you're doing mortgages, look at your leads, look at what's giving you that 20% of income that's generating the 20%. Because the 20% is normally what's giving you most of your money. It's not the 80% of the tasks you do. So focus on the 20% and delegate the rest of the 80.
This is the one moment in your life, or the one aspect that you're supposed to follow the 80-20 rule and focus on the 20%, not the 80%. So heed the advice, guys.
That's it.
It works.
If you have more questions, make sure you put it in the comment section. Please let me know what you think. Would you rather pay your mortgage out in cash and buy the house all cash? Or you like, hey, Malcolm, this makes sense. Let me invest my cash and just take a mortgage out. If you have any questions, make sure you put it in the comment section. Tell me what you think. And please make sure you check out this other video right here.
Boom.
That's it.
Over and out.